Let's start off with Taiwan Semiconductor. For those not familiar with the business, I know we have a lot of new listeners in the new year. So essentially chips, you may have heard of Nvidia, you may have Apple chips, for example, for the M chips that are produced. So all these chips are designed and then they are actually produced, the physical chips are produced by Taiwan Semiconductor. So it's a really good indication whether there's a lot of demand in the AI space for these chips or chip demand in general. Taiwan Semiconductor produces, I think, 90% plus of the world's most advanced chips. So you'll see if it's going well on their end. That means that Nvidia is making orders, Apple's making orders, you name the company, they're making orders from them.
Yeah, I think this was I think Buffett called this like the most important company in the world or the highest quality company in the world. That was I don't know, I can't remember. That was not too long ago, but he ended up actually having to sell this one just because of the geopolitical issues, but
Yeah.
it's pretty much the bellwether I would say for the AI industry, all this AI rollout. And if their earnings are any indication from this, quarter, I would say the cycle is nowhere close to being over. So revenue increased by 36% year over year, currency adjusted. So this company reports in Taiwanese, but they kind of adjust it all out to the US dollar. So any numbers you see here are in US dollars, but kind of currency adjusted. So 36% year over year on revenue. Earnings increased by 46.4%. And high performance computing now accounts for 55% of their revenue. And this is pretty much all due to the AI ramp up. If we think about, kind of traditional computing, it's very good at, say, doing one thing after another. And the theory here with AI is you need it to be very good at doing many things simultaneously. So these chips are more expensive. They make up the high performance computing segment, and I don't know what it made up in terms of portions of revenue, like pre AI boom, but it wasn't even close to what it is now. That's for sure. So gross margins hit 62.3%. So this beat the top end of guidance by 1.3%. And operating margins increased by 5.1% to sit at 50.8. So 50% operating margins is just absurd. There's a lot of they're kind of expanding into North America and Europe. And there's kind of a lot of, I guess you could say, the bear cases. They're not going to be able to push these margins out on, facilities in North America or Europe. But even if it goes down a bit, it's still just exceptional. For 2026, they expect 30% top line growth, gross margins to expand even further to nearly 65%. So we're going to see another bump in gross margins. So I mean, we can probably, if that's the case and they keep everything else in line, we can probably expect earnings growth to exceed revenue growth yet again. And the one thing they did mention, which is why I kind of mentioned at the start of this, that I believe the cycle is nowhere close to being over. They expect capital expenditures to come in at 52 billion. So this is around 30% higher than last year. And the craziest thing is they mentioned that capital expenditures in the next 3 quarters will be higher than the last 3 years combined. So there's a ton of spending here. They kind of mentioned there's a bottleneck in the space right now. However, it's not where most people have been looking, which is like, let's say, data centers or power supply, things like that. They said it's due to, TSMC's ability to produce. So this is why you see the company ramping up capital expenditures, kind of, putting more production because, the bottleneck exists there, which I mean is a good thing ultimately, especially, a company like TSM can spend so much, like they generate so much cash flow that, they can expand and kind of reap the benefits from this. And I actually ended up buying this one. It's one I own. I bought it. I think it was in the 290 range, like when it was at all time highs, and a lot of people thought I was pretty crazy, but I can still see a path for this company moving forward, especially if this spending keeps, churning out like this, which it looks like it is going to. I think the company's worth, what is it, 1.5 trillion? Yeah. So they have a $1.5 trillion market cap. If this was like a US based company, I mean, what would the market cap be? 2 trillion probably plus. But I think just, the Taiwan exposure, the geopolitical risk there kind of keeps it discounted, which I don't think that'll ever change. It will always be discounted because of this. But yeah, it's crazy good quarter from them.
So yeah, it's definitely it's getting up there. So very interesting to see. I think it's a great company. Again, for me, I probably would have bought it if it wasn't for the geopolitical
Yeah.
risk. So that was always the big reason why I stayed away from Taiwan Semiconductor.
Yeah, and I mean, you can think of a like Buffett. He had to sell it obviously due to this, but I mean, he's managing hundreds of billions of dollars. Whereas, I mean, me, retail investor, I mean, if I make this 4 or 5% of my portfolio and something happens, it's not like the end of the world. I think if this ever got to the situation where this became a concern, it wouldn't just be TSM going down. It would probably be an entire market situation. But yeah, it was a solid quarter. I was a bit hesitant on the whole, the AI capex spending here, but I mean, this is kind of an indication that at least over the next while here, there's not going to be any sort of spending slowdown.